this session rolling and find out a little bit more about a company I'm really excited to hear from. It's Pelorus Equity Group. And here to kick off the introduction for our next session is Managing Director at Binzinger Cannabis. Let's hear it for Javier Hasse.
Come on, there you go. That's it. Welcome, everyone. How are you doing? Today, we're going to talk about financing in the cannabis industry. We're going to talk about real estate with Mr. Rob Sechrist, co-founder and president of Pelorus Equity Group, one of my favorite companies in the industry. I'm going to take a seat with you. Rob, how you doing?
I'm doing well, thanks. It's great to be back. It's been a couple of years, and I was just thinking the last time that I left here, when I was leaving in the airport, there was flights arriving from Asia with people with masks on. I thought they were crazy. And then on my flight back, we took the mask off. So kind of going full circle.
That was crazy too. Like I remember we were saying like, oh yeah, this Corona thing ain't real. Oh man, what a ride. But we're back. We're back. We're happy to be back. I'm very happy to be sitting here with you. And I think the audience is very interested in learning a little bit about you, those who don't know you and don't know Pelorus Equity.
Sure. Well, thanks. We were the first dedicated lender to the cannabis real estate sector in 2016. Prior to that, we had originated 5,000 loans for $5 billion in the non-cannabis sector. And so when Dana Rohrabacher, our local congressman, passed the Rohrabacher-Blumenauer Amendment, which I assume everybody here knows, that defunded the Department of Justice from defunded the Department of Justice from prosecution of a cannabis-related business. We realized this was the largest newly created asset class. So by 2016, we had understood the space, and we started originating our first transactions. Today, we've originated 64 transactions for $350 million, secured by $750 million of value of properties with 26 payoffs. And the last time we were here, we had done $35 million and 13 transactions. So we had a 10x growth since the last time we were here.
You just stole my first question. I was going to ask you, like you were talking about the last time we were here and your growth. What does the equity raising environment look like today?
Sure. Well, let me fill in some gaps between there. We were the first dedicated lender to the space. We were the first to launch a dedicated funding vehicle. We were the first to do a private mortgage REIT in the space. We were the first to get an FDIC-insured bank to issue us a warehouse line of credit at institutional rates. We were also the first to get an Egan-Jones investment grade rating, which allowed us to do the first unsecured private bond offering with institutional investors in the sector. So we keep plowing these new markets, and the only one we weren't the first for was being public, but we don't want to go public. We and our investors like not having to report to the SEC and not have the volatility of our share price, and maintaining just a high, monthly yield dividend that we're putting out to our investors.
Let's talk a little bit about stabilized lending versus construction.
Okay. So
I'm just teeing you up. No questions here. It's like it's super hard mode.
Yeah. So our background is construction lending. That's what we focused on, and that was our specialty. But in this lending environment, we were stabilizing these borrowers and building these assets with them, and then our competitors were paying them off, and we were handing off our borrowers to our competitors. And so we went out and did our bond offering so that we could have a lower cost of capital and pass that through to our borrowers. So that enables us now to be able to go full circle and lend to, build the assets, and then once they're fully stabilized, step that down into a medium-term, 5-year loan with a significantly lower rate.
I'm feeling sassy, so I'm just gonna go for it. You told me something in confidence, and I'm gonna out to you, sucker punch you a little bit. DEA licenses, right? Things have changed in recent months. Until very recently, and for many years, the DEA only allowed one institution to cultivate cannabis, and that just changed recently.
So, yeah, we funded a DEA license last month. So many people in the retail world of cannabis investing are unaware that there's DEA federal licenses available. These licenses are allowed to cross state lines, import and export out of the country. These licenses are for research only, but it's an enormous market for the research. And the research, once we have the studies done on the research, that allows the feds then to start to consider rescheduling this, because without having the research to say that it's not a Schedule I drug, we're going to have a difficult time. So we're happy to be, I don't know of any other lender that's funded one of those transactions to date yet.
I'm from Argentina, where it's a country that has yearly inflation of 50%, so it's nothing strange to me, but America is rediscovering inflation recently. And I imagine, I kind of know, it's affecting the bond market.
Yeah.
How so?
Yeah, so, we're private, so we don't borrow from banks or have something that we're tied to on federal lending rates, and we're not selling off to secondary markets. So generally, inflation is not going to swing things for us. But where it does affect us, and we weren't forecasting this, last year, was when we do our bond offerings. When there's inflation, the bond market actually stops temporarily, and they're trying to figure out or when there's volatility, they're trying to figure out where the bonds are going to go. And so, even though we expected our next bond to come from a 7 to a 6% rate, in reality, it'll probably be at 7%, but the margin between the cost of funds for the safe money on bonds, where they have a margin spread, is actually tightening up. And so even though we'll probably be at a 7 in this, the market is that we actually price better. There's a cost index of what the government bonds are, that there's no risk, as opposed to our bond, and that margin is continuing to shrink in there. So we are tightening up on pricing, but it's not reflected in the bond.
What about 7% financings, by the way? You earlier you mentioned unsecured lending by PEG. You did a recent transaction at a very low rate for the cannabis industry.
I didn't hear your question, because it was.
So, unsecured lending.
So the bond was unsecured, is I think what you're talking about. So most when you go out and you get leverage on your fund or your assets, most of the time it's secured, and it's secured by your portfolio. We've been through several market corrections in our careers, and we don't want to have our portfolio tied to being secured, where our lender could call that portfolio because the performance of the portfolio is getting to, it has an issue in there, or the protective equity or the valuation basis has changed. And so we paid a premium on our bond. If we went secured, as opposed to getting 7%, we probably could have gotten a 5%, but we purposely went unsecured so that our bond is unsecured. It is not secured by our portfolio. We just have a promise to pay. And the reason that we did that is that no matter what happens in the market, no matter what happens with our portfolio, as long as we're making the payment, they can't call that portfolio. They can't call get to that collateral.
I mean, just combining two of the prior thoughts, right? Inflation and your portfolio. How does inflation affect your portfolio? Of course, like there's absorbing nominal rate changes, but how do you absorb inflation?
Yeah, so we bake in enough for normal markets to not make any adjustments, but in this market, we're now having to switch to floating rates on our longer term products.
Do you want to talk politics, maybe?
Sure.
What's going on? Like, what do you see? Do you see legalization coming? Do you see, what do you think of the MORE Act, the State Reform Act? Of course, Nancy Mace will be discussing state reform later, so don't say anything too bad about it.
Yeah. So I just try to look at it on a more broad basis. It all comes down to the Senate, and you need 60 votes to get past the filibuster. It's not a simple majority. This is not a budget item. So if you can't get the 60 votes in the Senate, it's a dead bill. And even though there's 17 Republicans that are in favor of cannabis reform, that would get you, it would get you that 60 votes, saying that you're for something and voting for it are two separate things. And even though everybody wants cannabis to be passed and it's 70% approved by the nation and all this stuff, in reality, this is politics. And there is, the Democrats would have to be able to push this over the line themselves. And I don't think that there's enough Republicans, maybe 2 or 3 that might vote for it in the Senate, but I don't think it's going to get to the 60 votes that is necessary. And we're coming up to the August break, and then we move into the midterms, and then you've got a lame duck presidency. I don't see the Republicans giving a win to the Democrats. And it's just, I don't see that happening. And I don't see the Republicans pushing, as when they most likely control the majority in both the House and the Senate, putting it on the calendar to give the win to the Biden administration. So then you start thinking, okay, well, when's the next opportunity? And the next opportunity would be a new administration. And a new administration, you want to have the executive branch, the Senate, and majorities in the Senate and in the House. And if you have that, I still don't see it happening because you're not going to burn your political capital on something that everybody supports. You're going to go for something much bigger.
What about, a half step like safe banking? Is that more likely?
I talk to my contacts all the time. I'm like, just pass Reform 280E. It would be the most consequential change. Or approve credit cards so we don't have the cash buildup. But the way politics is that nobody wants to give up the one thing that everybody wants without getting what they want. So it just, nobody's going to let it go. So when you talk about incremental steps and you talk about this stuff, incremental step is not incremental. It starts off with saying, hey, we're just going to do this. But to get the next guy, you got to add this. And now, by the time you get enough support, you've gotten too broad of a bill again.
Talking about specific politicians, marijuana Mitch McConnell, I hear he ain't running.
Yeah, so...
What does that mean?
So McConnell's not running, so that means that Thune is most likely going to be the Senate leader. I don't think it really matters if he's pro-cannabis or not. I don't think that the Republicans, from a general thesis, are going to bring a win and use up their political capital with the Democrat administration. So, now we're talking to the next administration. And I do like to go back and say that the only legislation that's ever been passed was by a Republican with McConnell. As bad as it, wasn't what we wanted, but it's a start. So hopefully we can get back to that point again.
I mean, it's definitely a bipartisan, almost nonpartisan issue. And it's interesting. Now, let's imagine legalization, right? At some point, right, everyone says it's when, not if. So it'll happen at a certain point. How does that affect interstate commerce? And in turn, how does interstate commerce change the landscape for limited license markets, for MSOs, for operators?
There's too many nuances for me to really prognosticate about that. In general, you think that if it's federally legal, well, first, what does that mean? Are you talking that it's legal for individuals, or that you've legalized the industry for businesses? So there's kind of 2 different avenues there. But I don't know. I think that the industry is going to be so baked by the time that legalization comes that it's going to be really hard to figure out, to unpack and have interstate commerce. There's going to probably be compacts and things like that. But I can't prognosticate that. We just try to deal with each as we're not an operator, we're a lender. So we're just trying to evaluate the transactions in the states as they're coming by real time. And we're not trying to be in any certain market or not a market. We're looking for the best transactions and the best operators anywhere in the country.
Now, why do you feel, and maybe this is not the right word, but I get the feeling that you feel like limited license markets are artificial, right, in a way, created by the current landscape. Yeah. Do you not see limited licensing being an issue in the future?
Well, I think that limited licenses are great for operators, but it's an artificial market. And if you're thriving in an artificial market, one, you're not having to compete against California, the most competitive state in the nation. If you've succeeded in California, however that happened, you're going to crush somebody that was in a competitive, in a limited license state. So when that happens, there's going to be some fallout that'll happen in limited license states. But more importantly, limited license states, the assets are overvalued, the licenses are overvalued, And that's all fine, but when that license, when they issue more licenses, or if it becomes deconflicted and now you can cross state lines, all your assets are overinflated, and now you're going to have to compete against the top operators in the country. So you better have something figured out. You better have looked at the California market and figured out how those guys are doing it, and be prepared for that, because that day is coming. I think it's a lot farther along than other people think it is, but it's going to happen at some point.
You're talking about California being such a key market, right?
Yeah.
Why and how is it different for like operators and lenders, right? It's definitely not the same.
Sure. So the two questions there. Operators are looking at states in a different fashion than a lender is. An operator wants a limited license state, protected, and to make the most profit. That's their goal. A lender wants the ability to replace a tenant as easily as possible. If I'm in Florida and our borrower was to fail, it's going to be difficult to bring in another tenant that can step into that transaction, as opposed to Trulieve or Curaleaf not absorbing that market share. So it's a different perspective. We are not as bullish on lending in Florida, or we would have different lending metrics here than we would in potential California. There's differences of both. California, we can replace the operator very, very easily, or Michigan. So to us, that's significantly a safer position. But we're willing to lend in all states. We have a lot of things that are in our toolbox to adjust how to offset that risk, reduce the LTV, structure the loan a different way, cross-collateralize their assets in another state. So there's a lot of different things that we can do.
How do you offset that risk then?
Well, those are some of the toolbox that we do. So we have a secured asset that we're utilizing. Mainly, we're looking at how much are we going to be willing to lend and feel that we're covered no matter which way the market goes. So that's the primary way, but we look at personal and corporate guarantees. We look at how we're releasing funds and the covenants that we put in. So there's many different ways. That's a more granular conversation.
From a lending perspective, you say California is a very interesting market, Florida not so much. Which other markets are very interesting from a lending perspective?
I wouldn't say that it's interesting. I'm just using the two extremes of California versus Florida. That we look at those as a lender differently than an operator would. So we would probably in Florida, if we're going to lend to somebody in Florida, they're stepping into that market. They're going to have to be an enormously well-capitalized company, way farther than probably a publicly traded company that's coming into this market that's already been operating somewhere else, something like that.
Got a couple of minutes left. Any concluding thoughts, anything that you think is particularly interesting when it comes to trends in the market, anything in the happenings of the current market?
Sure. I think that the form factors, bringing new people into the market is definitely the trend. If you're an operator and you're selling your product on the micro liter dosage as opposed to a pound, you're going to be a much more successful operator. We funded a co-packing facility. They're one of the largest in the country. They do hot and cold beverages. They can do 2,000 bottles an hour. That's really interesting. They have food processing. So I think all these different form factors are as a lender, we need to be able to underwrite not only cultivation facilities, but in dispensaries and things like that, but also kitchens and beverage processing centers and things like that for distribution. There's a lot. The form factors, I think, is where this is, as Boris said earlier, is where the industry is really going to continue to take off.
Definitely. Rob, where can people reach you? How can people contact you? Of course, here, but how can they find you here? And how can they find you online, on the phone?
Yeah, you can. Our website is Pelorus Equity Group. It's spelled differently, Pelorus Equity Group. And you can, for investors, you can just type in IR for investor relations at Pelorus Equity Group. And for a loan, you can just type in info at Pelorus Equity Group. We only lend on assets with real estate, so we don't do any operator loans. So that's a hard requirement for us that is required for everybody. But Yeah, happy to be back here. It's great to see the growth of the conference, and I think you guys went from 500 attendees last time to 2,000 or something this time. So
It's crazy. You always been here. We appreciate your support. We appreciate you being here. Rob Sechrist is a co-founder and president of Pelorus Equity Group. Go check him out.
thank you very much. Thanks.
Thank you.